Right, let's begin. Hello and welcome to our CGAP Thought Leadership webinar, Inclusive Insurance, Building Resilience, Navigating Risks, Empowering Development. My name is Lorcan Hall, Senior Advisor to CGAP. For those of you not familiar with the World Bank House CGAP, we're a global partnership of over 40 leading development and funder organizations. Our objective is to improve the lives of people living in poverty through financial inclusion. We do this by testing solutions, sparking innovation, generating evidence, and sharing insights, as this webinar will aim to achieve today. Thank you for joining us. About 300 people from across the scientific, policy and practitioner communities registered for this webinar. Executives from multilateral organizations, funders, monetary authorities, regulators, supervisors, insurance and reinsurance companies, and the disaster risk management community, including aggregators and distribution networks. And some admin. Microphones and videos have been switched off for the event, but please submit questions in the chat. Closed captioning is available in English if you've joined the webinar via the Zoom app. Captioning is not available if you've joined via the Zoom browser. You can access captions if you click the More button with the three buttons at the bottom of your screen and then click Show Captions. We've crafted a webinar to appeal to these different audiences, but in a way that we hope creates a joined up narrative. Before introducing our speakers and agenda, I would like to briefly share the context for the discussion. So cascading and compounding risks and crises, climate change, fuel security and healthcare access, for example, are obscuring our vision for a better tomorrow and impacting our collective ability to deliver urgently required change today. Stronger risk management and greater financial resources are crucial levers, yet we are not effectively using many tools at our disposal. One of these underappreciated and underused tools is insurance. This webinar will showcase the insurance industry's distinctive strengths in building resilience, navigating risks, empowering development across the four dimensions of sustainable development: economic prosperity, social inclusion, environmental sustainability, and peace and good governance. Specifically, we'll focus on the power and potential of inclusive insurance for households and micro and small enterprises in the global south. The primary objectives of the webinar are to elevate recognition of the insurance industry's distinctive resilience building and risk management capabilities in achieving the SDGs and helping establish inclusive insurance as an explicit lever for change in the 2030 agenda and the post-2030 agenda. There's momentum in the understanding of the links between insurance and sustainable development. For example, over the past year, there have been several high-profile initiatives, such as a position paper from the UN Sustainable Development Solutions Network, SDSN, titled Insurance and Sustainable Development, Partnering Risk, Resilience, and Transformation. 4 of our 7 speakers today have contributed to this paper. There was also the Sevilla Commitment, which is the outcome document from the 4th International Conference on Financing for Development. We also have the CGAP reading deck amongst a library of material that CGAP is producing. The deck is entitled Inclusive Insurance, Scaling for Resilience and Impact. And finally, the UN General Assembly resolution from December last, titled Financial Inclusion for Sustainable Development. My colleague Sarah Parker will add links to these documents in the chat now. We have an ambitious agenda over the next 85 minutes. We'll hear from 7 speakers one by one before they share some reflections and answer questions. For clarity, we will take audience questions at the end of the webinar rather than after each speaker. You can send questions in the chat box throughout the event, so no need to wait until the end. Please make sure your questions in the chat box are directed to everyone so all participants can see them. So, our speakers, and this is the sequence that they'll speak. So first of all, we have Professor Patrick Paul Walsh, Vice President at the UN Sustainable Development Solutions Network, SDSN, and Director of its SDG Academy. We have Professor Dr. Phoebe Kanduri, Co-Chair of the International Group of Scientists responsible for producing the UN's Global Sustainable Development Report 2027. We have Melissa Leitner, Head of Life and Health Propositions and Sustainability at Swiss Re. Anar Kara, Senior Financial Sector Specialist at CGAP. Sophia Bibi Rabnawaz, Assistant Director at the Insurance Division at the Securities and Exchange Commission of Pakistan. Matthew Debray, Lead Advisor for Climate and Disaster Risk Financing and Insurance at the World Food Programme. And Uda Soshiro, Director, Social Sustainability for Prudential PLC. Here we go. Right, we're going to jump straight in. Let's begin. Professor Walsh, Paul, as someone who's involved in developing the 2030 Agenda, its 17 SDGs and 169 targets, can you begin by explaining the societal importance of the 2030 agenda, and speak about the role of inclusive insurance in building resilience and navigating risks, please.
Yeah, no, thank you, Lorcan, very much for so much for organizing this webinar and CCAP. So I think what Lorcan wants me to do is just to very briefly explain not the 17 goals and 169 targets, but just to give some intuition about where we are with the UN 2030 Agenda for Sustainable Development. And it really goes back to a very simple principle. There's, as Lorcan said, there's 4 dimensions, but if we just fix on the economic dimension, the idea here is that really we should be doing no harm to society, nature, and governance in our economic activities. And unfortunately, coming into 2015, in the run-up to 2015, people did see a lot of globalization and good economic activity, and in some ways was even optimizing against social inequality. In other words, using social inequality, using nature as a source and a sink, and maybe using poor governance across global supply chains to actually create prosperity and economic growth. So in a sense, the challenge at that time was definitely to internalize these spillovers and hopefully make them positive spillovers. In that, could we not have economic growth or economic development or economic prosperity that would actually reduce social inequalities, protect our environment, and actually pursue good governance across nations. The agenda, what they say for governments, the SDGs should be implemented at all levels of governance. So that could be local level, national, regional, global level. But the SDGs is also a framework for governance inside, say, universities or corporations or households as well. Sometimes people call these 4 dimensions ESG. So if you're a corporate, you might be asked to internalize any damage and do no harm to nature, society, or knowingly do no harm to nature, society, and governance around you. So in essence, this was really is what the project is. And I'm sure a lot of people here with actuarial science backgrounds and insurance backgrounds understand the 4 dimensions and how they interact. I just wanted to talk about, because we're talking about inclusive insurance. Insurance was only mentioned once in the 2030 Agenda for Sustainable Development. On the other hand, though, when you look through the document and you look for terms like resilience or adaptation or prevention or risk, it's actually right across the documentation. But I just want to talk briefly about SDG 1, which is the no poverty goal. And we wrote a paper during the intergovernmental negotiations in 2014, which was about going beyond the bottom billion. There was a kind of perception that poverty was always, and even today, if we take the $2.15 cutoff, we seem to always have a billion, say it could be 777 billion going to bed hungry, but let's say the bottom billion. But what we tried to say, though, is actually when you look at vulnerability and not just, let's say, who is prone to going into poverty, and let's say you even went up to $6.85, you could effectively bring 4 billion people who are vulnerable to poverty. And this really mattered because if you got data sets and you tracked the dynamics of poverty, like who inflowed, how, for what duration, what shock induced it, what you notice is there's actually quite a lot of short durations. So, for example, if we'll probably hear today about agriculture or rain-fed agriculture, if a drought happens, people can go into a period of extreme poverty from an economic shock. Which in Malawi, we did a study where they actually take blood samples in every 4 houses where the incidence of HIV/AIDS 100%. And your data might tell you that HIV is in poor households. But actually, if you have longitudinal data, you actually see people without insurance, people who have coping strategies where they have to sell their assets to afford the expensive therapies. They might actually be middle-income houses that eventually, because they sell their assets, end up poor, and people are pulled out of school and so on. So it turns out HIV is found in poor houses, but they weren't always poor. They transitioned from higher levels down to lower levels. So this kind of, just to finish the point, If you look at SDG 1 Target 5, it says by 2030, build the resilience of the poor and those in vulnerable situations and reduce their exposure and vulnerability to climate-related extreme events and other economic, social, and environmental shocks and disasters, right? And why I'm pointing this out is that anyone in the Northern Hemisphere, obviously, in a country like Ireland, I would have insurance. I would have insurance for my house. I'd have health insurance. I would have insurance for a job separation. So a lot of what we do when we get those shocks, we're able to count on insurance helping us get to the other side of those shocks. But if you're in the population and 50% of the world population have absolutely no social insurance or no insurance of any kind in depth and scope, and their coping strategies, you could be perfectly okay, but then you get an economic shock or a health shock, a social shock, or an environmental shock like a flood, and that can spin you into a fairly long period of structural poverty, including your family and the communities around you. So it is quite a shame in some ways that these populations do not have insurance as an instrument for resilience and for coping.
Brilliant, brilliant, Paul. Thanks for that opening. I think again, you and I have spoken about this many times. We know that the 17 SDGs is explicitly an innovation and transformation agenda and a blueprint for a sustainable future for people and planet. But our collective progress will be very disappointing. How can we move more from ambition to greater action with insurance as a catalytic lever?
Yeah, so what I kind of described there, obviously, is like, and the insurance industry is particularly good at this, is putting stuff on the risk register. And in the position paper that many have contributed to on this call that we did with SDSN on insurance and the SDGs, we really wanted to talk about innovation and opportunities, an opportunity register. But one thing we have to understand is that if you want global or universal access to health, to education, if you wanted social protection in general, this is a global public good, and most governments in middle to low income countries will not have the fiscal space to actually deliver something like this. So there has to be public-private partnership. On the other hand, it's a global public good, so governments have to take the lead and they have to create that and facilitate an enabling environment for the private sector to actually step in. So I think we did, just to say, and I'll put this in the chat in a while, we have a landing page in the SDG Academy where we have our position paper, we have our course, we have the webinars in the lead up to Seville Financing for Sustainable Development meeting. We have our Seville Action Initiative, which I'll describe in a minute. But it all talks to the idea that we have to somehow get a public-private partnership going. We have to build the capacities. And this goes back to the data that's collected in an observatory, to how it's modeled, to how it's actually where people actually get into a room and innovate and come up with solutions and products that are presented to finance ministers and in a way can be implemented. But that capacity isn't there yet. And in a sense, you could blame the public sector and that we don't know who to ring, who's the risk officer in the government, who's going to actually sit with the private sector, learn the capabilities on both sides, learn what data is needed. But if we want to do biodiversity restoration, if we want to actually roll out en masse social protection systems, including social floors, it has to be done in an SDG 17 style partnership.
Fantastic, Paul. Thank you very much for that opening. And we're going to move over to Professor Dr. Phoebe Kanduri. Phoebe, you're involved in several global sustainable development initiatives, including co-chairing the UN's Global Sustainable Development Report 2027. What are the report's objectives and why are these important now and for the post-2030 agenda?
Yes, well, can you hear me?
We can hear you. We can see your PowerPoint slide there as well, Phoebe.
Very good. So can you actually see the PowerPoint now?
No, we lost it there for a moment. Do you want to try it
now? Yeah, there we go.
Yes.
Okay, very good. Okay, so in this era of multi-crisis, so we have economic crisis, right, low growth rate, a big number of countries at the brink of the fall. And what I consider very, very important the inability to translate into productivity our incredible pace of technological advancement. This economic crisis, together with increasing inequalities within countries and between the global north and the global south, if they are combined with the climate crisis, the biodiversity crisis, and the pressures on speed, really create an almost permanent multi-crisis. And we know, as Paul just said, that we have our roadmap away from this multi-crisis. And we have to really decide that we want to follow that roadmap. And the roadmap is, of course, Agenda 2030, this integrated system that brings into conversation on a sustainable pathway the biosphere, society, and economy, and creates with SDG 17 collaboration between the goals. Now, for me, what is important in order to accelerate this transition, and I'm bringing you experience from all the global initiatives that I am working with, but also the work that my research team is doing, is that we need to really think out of the box. So I have this quote that I like very much. You don't discover electricity by perfecting the candle. That's why frontier science matters. Frontier science matters because we need to think and establish a framework where we can break silos. We can break silos between sciences and disciplines, between science and technology, between science, technology, and all other stakeholders, that is politicians, policymakers, financiers, and that's where insurance comes in, but not just there, and also the civil society, in order to create systems transformation pathways that are based on integrated system science, that are stakeholder co-design and stakeholders become shareholders, that are open access and provide capacity building to really provide access, and that they are supported, as Paul said, with blended finance. So I'm here saying 10 years, almost 11 years after the endorsement of 197 countries of the SDG agenda, that the real constraint isn't data or science or technology or money. The real constraint is capacity, transparency, and accountability in order to translate public goals into investable projects, long-term needs into fund-compatible assets, and risks that exist to risks that are priced and allocated. And this is what IFORIA, the research team that I lead, this is a research team that brings together 4 different main research laboratories, one at the Athens University of Economics and Business, one at Athena Research Center, the Sustainable Development unit at this research center that focuses on AI, machine learning, and information technology, University of Cambridge, where half of my affiliation sits, and a global climate hub that we are chairing. So what do we do there, and how this work is connected to the global SDR? The global SDR is the United Nations flagship scientific assessment on global sustainable development, and it will be the main document, scientific input to the deliberations of the UN High-Level Political Forum on Sustainable Development. We have 2 basic mandates. First, we need evidence-based, that is science-based policy guidance for the integrated action that is needed in order to increase accountability, fairness, and accelerate progress with regards to the SDGs. And we also need to lay the foundations for the beyond 2030. At the moment, 197 countries have endorsed the agenda. 193 countries have submitted voluntary reports on the SDGs. We have the global and regional frameworks of policies becoming more and more consistent with the SDGs, and we have achieved about 20% implementation of the ground. What we need now is to get that all this success, because it is a success story, to achieve all this in 10 years and accelerate that success. To accelerate that success, what we are suggesting are global commons, digital global commons for SDG implementation that are basically treating and in complete open access these 3 steps. SDG, continuous management, measurement and monitoring, and SDSN and IFORIA and other institutions have created a very elaborate framework of metrics that allow us to know exactly where we stand on the SDGs at different scales. Then we need to co-design between science and stakeholders the transformation pathways. These are what a country or a city or a local authority or a company or a region of the world needs to do in order to achieve the SDGs. So how it closes the gap between where we are as we measure step 1 to where we want to go. And here we construct digital twins between nature, infrastructure, economy, and society, the 4 systems that need to be working together in order to integrate per sector of the economy what are the technological, policy, fiscal, and financial changes that need to take place in order to achieve the SDGs. And the third step is, of course, the financing. And insurance is very important in this third step, and I'm going to come back to this. So measurement, this is SDSN Sustainable Development Report, come out every year. It gives you exact understanding of where we stand with regards to the different SDGs and the targets within them. Then step 2 basically transposes in a platform that you see on this slide. We bring together all the data, all the models. The data becomes interoperable between geospatial, socioeconomic data, real-time data, and then feeds into the models. The models are allowing the detailed analysis of each sector in the economy, energy sector, transport sector, water sector, land use sector, marine use sector, in an integrated mode, and they are beyond GDP models, meaning that they take into account not just what we produce as an outcome that is measured, but also natural capital and human capital. So these are models that price and internalize all the externalities and take into account the planetary boundaries as constraints. This integrated modeling allows us to derive exact changes that need to take place in each and every sector of the economy by recognizing the synergies and the trade-offs between the sector that will get us in an optimized manner between where we are today and where we want to go by the set date, the date that is set in the national or regional policy. So I'm already going beyond 2030 because we know that we cannot achieve everything by 2030. And then let me say another 2 works on the importance of the beyond GDP and make reference to a report that came out before our report that is coming in 2027, but is highly referenced in our report, Counting What It Counts. Because when you move from GDP-based growth to well-being-based growth, this transforms economics from a system that measures the flow of production into a system that measures the accumulation and preservation of comprehensive wealth that sustains human well-being across generation. And there are KPIs and indicators that are suggested here that can go into national account and change everything in terms of economics, from macroeconomics to microeconomics. And this, as already Paul also indicated, it can be translated into company level management guidance, because the SDG can be translated into ESG. In Euphoria, we created digital tools that allows a company to measure its performance against ESG and identify the gap between where it is and where it wants to go, and then advise the company to transform its business plan in order to reach the ESG goals. And of course, all this has to happen in a full iterative and validated mode with the stakeholders. In Euphoria, we have 70 plus active living labs where we continuously co-design with the stakeholders. That is, we lay out the science, we explain the science, and we ask them to work on that basis in order to design what is really sensible for them and become shareholders of that design. These living labs include more than 120 countries that we work with in terms of the Global Climate Hub. The Global Climate Hub has already produced European and Asian and global reports for the transition pathways in 120 countries. In closing, and before taking 2 minutes to say something more specific about the insurance, it's excellent to co-design with the stakeholders, but it's hugely important to make sure that your stakeholders have the skills to actually be part of this transition and of this suggested shareholding. And at the moment, we know we have evidence. This is a report that we put together 2 years ago that showcases that 85% of the needed skills and professions for implementing the European Green Deal are not yet in the European labor market. And that's why a huge investment in capacity building is important, and this is what the SDG Academy is doing. And we have created tools that allow you to identify for each policy which skills and professions you need in order to be able to implementing, and then you go selectively and upskill and reskill based on existing vocational training courses, many of which and of excellent quality are the SDG Academy. It is important for us to say a few things about the insurance market. And at this point, let me stop sharing and let me give a few remarks on this. Insurance for us is not just a tool. Insurance is a way of getting into the process of articulating how you are gonna de-risk your projects. One important element of the risks and of creating the financial capacity for implementing the portfolios of investments that derive from your integrated analysis is to be able to de-risk your projects. And de-risking your projects means that you are able to first identify the risk on each and every project. Second, to be able to understand the cascading effects of these risks. And third, and importantly, to understand how you use existing finances to de-risk. In principle, public money should come in and de-risk projects as much as possible. And risks in these projects have to do not just with natural exogenous risk, that is extreme weather conditions, probably caused by extreme climate events, biodiversity collapse, water scarcity, and so on, but also endogenous risks that have to do with political risk, with technical risk, risks that have to do with the capacity in the labor market, these risks that have to do with procurement processes. So public money should be used as much as possible to lower the risk of the derived science-based and stakeholder co-design portfolios of investments, and then you try to attract private money in order to finance the project. Private money, there are a lot around. Private money, there are in trillions available, but they need to, and they are looking for interesting projects. However, they need to identify the projects that are not extremely risky. Insurance and the insurance company has a huge potential in this capacity, because providing insurance is not just about coming in after the event, the negative event, and provide support, but it is also about creating those incentives for adapting capacity to recognize risks. And this is a huge gap, both in developed and developing countries, but especially in countries that are more vulnerable in terms of income, geographical locations, social situations, and so on. So it is a crucial tool that can come in and provide you adaptive capacity. In addition, insurance companies have big funds, and they can earmark these funds in order to be able to engage in process of energy decarbonization, in flood reduction, in water scarcity reduction through efficient agriculture and resilient water and sanitation systems. So it's a big industry. It's an industry that is quite efficient. It needs to go closer to the stakeholders, explain the possibilities, and be able to creatively create tools that will allow the small and the big to engage. So you also need tools that are relevant for the vulnerable, for the not economically strong, for the poor in terms of income, poor in terms of education, poor in terms of health. But it's also a tool that can also be provided to as a resilient backbone for fostering big infrastructural projects that will again reduce risks. I will stop there, and I will be very happy to come back. Thank you.
Brilliant. Thank you very much, Phoebe. That was fantastic. You painted a wonderfully detailed picture of this agenda. And again, echoing Paul, you've emphasized SDG 17 partnerships and the need for a whole society approach across the public and private sectors. Fantastic. We're going to move on to Melissa Leitner. Melissa, can you begin by speaking about the systemic importance of the insurance industry and the role of insurance in achieving the 2030 agenda, please?
Sure. Thanks, Lorcan. Maybe if I can pick up on one of Phoebe's points there, where she switched to talking about the insurance industry. She said insurance is not just a tool. And I would add to that insurance is also not just a financial service. A well-functioning insurance system is actually core infrastructure for resilience for society against the risks that we face and for sustainable development. I'll speak very specifically from the life and health insurance sector, which is my speaks to my background and my main domain. And there's a very direct link from life and health insurance to many of the SDGs. To name a few, firstly, of course, SDG 1, poverty prevention or reduction, SDG 3, health outcomes, and SDG 8 on economic resilience and the ability to work and be economically active. All of those are relevant to life and health and vice versa. Insurance really acts as a shock absorber. And for life and health protection, it's about stabilizing households and enabling the members of households to be active and long-term participants in the economy. Now, if we think about public debate or discussion on how society is vulnerable to risks and questions of sustainability, a lot of the discussion tends to focus or at least think first around topics of climate and natural catastrophe or environmental risks. But it's a little known reality that if you look at protection gaps, what we in the industry call protection gaps, so the amount of coverage, insurance coverage that society needs but doesn't have currently, then life and health protection gaps, when you quantify them, are about 3 to 4 times as large as natural catastrophe protection gaps. But they get far less coverage or discussion and debate. And that's an imbalance that I'd love to see change in time. Illness in particular is one of the fastest routes into poverty. Paul was speaking earlier and he gave an example around HIV and how that can help or cause a family to fall into a situation of poverty or close to poverty. It's a very good example. The World Health Organization reports that there are about 1 billion people, so 1 in 8 on the planet, who live in a household with catastrophic healthcare spending. What catastrophic means is more than 10% of the household budget being spent on healthcare. I mean, imagine that in terms of your own finances, more than 10% of your budget being spent on healthcare expenditure. That is huge, and you can understand why that's described as catastrophic. Now, illness is actually a double burden, and it extends across generations, because when ill health strikes a household or a family, not only is that family then subject to additional healthcare costs, but often their ability to carry on earning an income is threatened, and they experience those two stresses simultaneously, adding extreme pressure to a household and to multiple members or multiple generations within that household. I will be stating the obvious by saying that health and mortality are very closely correlated risks, but I want to shift attention more specifically towards mortality risk or mortality protection gaps. And again, quantifying that, households currently are estimated to lack 56% of the required financial protection after the death of a breadwinner and the consequent loss of the income from that breadwinner. So more than half of that protection is currently missing from society today. Think about practically what that can mean for a family. It can threaten housing stability, the ability to keep a roof over a family's heads. It can cause children to be withdrawn from school or from other forms of education. A family might end up selling productive assets that would otherwise help them continue earning an income. Or maybe they go deeper into debt or even reduce healthcare spending, which again creates this vicious cycle. So you can hear through those examples how so much of that touches on so many of the different SDGs. If we switch quickly to a lens that's much more familiar to the insurance industry and looking at global mortality protection gaps, they've actually never ever been higher than they are today. If you quantify them, they are worth something in the region of $430 billion per year in missing premium income for the industry. If you want to put that into perspective, that's roughly equivalent to the entire annual GDP of my home country of South Africa, which, as I'm sure many will know, is the greatest or the largest economy on the African continent. So an entire country's GDP is missing from the potential revenue stream for the entire insurance industry, just as a result of mortality protection gaps that is missing today for society. So I would say that life and health protection is severely underutilized as a sustainable development tool, and it really does have so much potential and a much bigger role to play in sustainable development discussions. So we have to then think, well, what needs to change? How do we address this problem? And I would argue that we really need to look at the problem through a lens of inclusion. And inclusion starts with thinking about the question of relevance, or for insurance, we have to think about what products do we make available and to whom. Looking at ourselves in the mirror, speaking from the insurance sector perspective, I can admit that I feel our products are often far too complex and not necessarily aligned to the real needs of the more or the most vulnerable sections of society. And the industry needs to do more to get a better understanding of what the real needs are of those underserved segments. I would also say that we should shift from standalone risk-only solutions to solutions that really meet the breadth of needs that customers have, particularly around the question of prevention. An insurance claim is clearly not good for a customer. It's also not good for an insurer, and it's in all of our interests to try and prevent that claim from happening in the first place. Accessibility is also a huge challenge for the insurance industry, and here we need to do better to reach more people. And I would say that what we need to strive to do is meet people where they already are and stop trying to develop distribution models that so far have worked for the higher income segments in society. And we need to develop the kinds of distribution that leverages partnerships that sit beyond the boundaries of the insurance industry, and use more models of embedded insurance and digital models to reach large numbers of customers at scale. Thirdly, we have to look at affordability clearly, and we need to think about, we need to rethink price and value and the equation between those two aspects. This is not just a topic for developing markets. This is a topic for developed markets as well. The products that we build are often not affordable at lower income levels, and often because of constraints that we place on them in terms of minimum premium or minimum policy size thresholds that are a function of the way that we distribute that business. We need to figure out how to move to smaller, simpler covers and distribute those at scale. So affordability and accessibility really do go very much hand in hand. And then thirdly, or fourthly, I would highlight also some other further enablers. You might want to put them under a heading of awareness, because trust is so crucially important in our industry. And we really need to do more to build consumer trust and develop also financial literacy. Consumer protection is extremely important, and that needs to be balanced against an environment and a context that also fosters and supports innovation happening to address some of these deep challenges that we have. And for that, I feel very strongly that we do need to have very strong engagement between the industry or within the industry and regulators on these issues and these questions as well. So consumers really need to feel much more confident about the types of products that they buy for us. I think if we strive to rectify some of these issues and we help to get insurance, life and health insurance in particular, more into the hands of these vulnerable middle and lower income households with solutions that are much more relevant to them, that meet them where they already are, then we can enable people to recover from health shocks, to continue participating economically, and ultimately to thrive.
Wonderful. Thanks, Melissa. It's great. You've quantified the size of the risks. You've spotlighted life and health. You offer practical advice across the availability, accessibility, affordability, and awareness. Really, really strong. Can you share an example from Swiss Re's work of how inclusive insurance contributes to the SDGs, please?
Yeah, sure. The example that I prepared to share today relates to the topic of metabolic health. Traditionally, when it comes to insurance, policyholders receive support from insurers after they develop a health condition or even after death, so quite late in that journey. But actually, there are ways that insurers can support policyholders to develop their own resilience or health resilience much earlier, before claims happen. So metabolic health or metabolic dysfunction and insulin resistance actually sit behind a huge proportion of non-communicable disease. There are studies that show that in developed countries, more than 90% of deaths are somehow associated with metabolic dysfunction. So it really is a deeply underlying cause of claims or of adverse health outcomes. But prevention efforts towards metabolic health are often focused a lot more on the downstream symptoms rather than that underlying root cause. So for us, in the context of disability insurance or disability claimants in the UK, we introduced a nutrition first and lifestyle-based metabolic health intervention with claimants at an early stage of claiming, and offered them the opportunity to participate in this program. And the objective was really quite straightforward. We simply want to help people improve their health and their functional capacity, with the ideal scenario that we are able to get them back to work and economically active again. So it's a great example of SDG 3 and SDG 8 working together hand in hand. I'm very happy to share that we've had very good early results. Firstly, on customer acceptance, more than 80% of the claimants that we offered the program to agreed to participate or opted to participate. And across all the participants, we saw positive outcomes in weight loss, in return to work rates, and even in some cases, 1 or 2 cases, we were able to help them reverse their pre-diabetes or diabetes, which is a fantastic result for a lifestyle-based nutrition program. Looking at it from a more profit-oriented perspective and measuring that through return on investment, compared to the cost of implementing this program across all the claimants who accepted the program, whether they achieved positive results or not, the claim savings were 20 times more than the amount invested. So really a fantastic return on investment there. I think the core of insurance is, which is financing risk events after they happen, that is clearly already valuable. That is clearly already a support to society. But on top of that, such as in this example, insurers have a perfectly aligned incentive to help those adverse outcomes from happening in the first place. And so by using life and health insurance and other forms of insurance in this way, we have a chance to improve health resilience, which ultimately helps to strengthen economic resilience and social inclusion, and touches on many elements of the SDGs and sustainable development.
Brilliant, Melissa. Thank you very much. That's a fantastic example of how some insurance and reinsurance companies are innovating beyond the traditional financial payout model and looking at how they can do proactive risk management. And again, the example you've shared there is SDG 3, target 3.4 to reduce non-communicable diseases. Really, really strong. Right, let's move on. Anar, can you please speak about the evidence that inclusive insurance contributes to the SDGs and its role within broader financial inclusion agendas?
Sure, happy to. Thank you for the question. I really like Melissa's example at the end, and I think it's super important to have these real world examples. And I also think that, when we're making recommendations for insurance to be integrated into the SDGs, that needs to be backed by evidence. And to have that evidence, CGAP has launched the Impact Pathfinder, and my colleague Sarah will share the link in the chat. And just to give a little bit of an understanding of what this Impact Pathfinder is, it's a gathering of evidence to showcase the role of financial services, so credit, savings, payments, and insurance, in reaching broader development outcomes. And I think that's important because it's no longer just about, access to financial services, but how is that actually contributing to development outcomes such as climate action or zero poverty? And why does that matter? Well, we all know that if you can't measure it, you can't improve it. And so the Pathfinder can help us in this regard. It shows us what works, where the knowledge gaps are, so we can design better interventions. And if we're talking about attaining development goals, we need the evidence that insurance actually does so. So what do we know and what do we learn about the impact of inclusive insurance? The Pathfinder identifies several pathways, such as insurance to health outcomes or poverty reduction, but I'm going to focus on the impact pathways for climate, on climate resilience, and on climate adaptation. So in terms of climate resilience, the evidence is positive. Insurance helps households absorb shocks, stabilize consumption, and recover faster. So for example, in Ghana, one study found that insurance reduced missed meals during climate shocks from 23% to 15%. The evidence also suggests a positive link between insurance and household long-term recovery from climate shocks. So insurance payouts enable households to continue farming activities, supporting overall household welfare. And I'm giving a very rapid overview, but if you look at the platform, you can see how many studies had positive evidence, you can get the detail, but I'm not going to get into that right now. I just also want to touch on insurance and climate adaptation. There as well, we see the evidence is positive. Insurance enables rural households to invest in climate smart practices like drought-resistant seeds or green pesticides by shifting risk to third parties. We also see it encourages livelihood diversification. But what is really interesting is to dig into some of the factors that influence how effective insurance is. So for example, bundling with credit increases farmers' ability to invest in long-term adaptation. Premium incentives like rebates for adopting climate smart practices boost behavior change, and coverage design matters. So for example, insurance that covers the cost of production encourages farmers to increase the use of agricultural inputs, which are insured, while reducing reliance on labor, which is not covered by insurance. But there are challenges still. High premiums, mismatches between payout and actual losses, and delays in payment can erode impact. So for some of us who have been working in the insurance space for some time, some of these insights might seem evident, but it's important to leverage them for design and recommendations for insurance and development. And the last point I want to make to answer your question, Lorkin, is why does inclusive insurance matter for financial inclusion or for broader development strategies? Now that we see the evidence, we have to be clear about what happens if we don't include insurance in our development strategies. Without inclusive insurance, financial inclusion risks going into reverse. CGAP's own research on climate shocks shows that when disasters hit, inclusive finance providers pull back. Credit portfolio shrinks, savings products are withdrawn. So we are seeing that institutions that serve low-income customers are actually pulling back precisely at the moment when those customers need them the most. Insurance is therefore not a complement to financial inclusion. It is increasingly a precondition for it. Without agricultural insurance, lenders might find it increasingly difficult to remain active in agricultural finance. Without health insurance, can we really achieve universal health coverage? Without life and property insurance, do we get the collateral that underpins credit? So insurance, it really sits at the intersection of climate resilience, financial inclusion, and stability. And I think that we really do need it to achieve our development and economic objectives.
Brilliant, brilliant, Anna. Thank you. I think your focus on climate action there, SDG 13, complements the material that Melissa shared earlier around SDG 3, good health and well-being. And the impact Pathfinder is a fantastic open science database. And how is CGAP supporting inclusive insurance and resilience efforts across the scientific, policy, supervisory, and practice areas, and what's required to do more?
Perfect. You mentioned a few areas. You mentioned policy, practice, science. I'm going to take each in turn. I think on policy, what is really important is the landscape is shifting. Melissa already mentioned the protection gap. And closing the protection gap has moved into mainstream global policy priorities. At the G7, closing protection gaps is now on the agenda. At the G20, under South Africa's leadership, the Sustainable Finance Working Group launched a joint World Bank IIS input paper on addressing insurance protection gaps. The UNCDF prepared a compendium of risk transfer solutions that was also launched in South Africa. So we can see that from a policy perspective, the topic is gaining in importance. And both these documents did have reference to microinsurance. And so CGAP had the opportunity to contribute to both. And so CGAP, from the work that we're doing, we're quite uniquely positioned to help translate political ambition into action. We're sitting within the World Bank, which gives us access to development policy conversations, as well as our member network that can help us embed insurance into some of these frameworks. On practice, our work shows pathways for inclusive insurance to be designed in ways that are scalable and valuable for low-income customers. One example is the work that we're doing with SEWA, the Self-Employed Women's Association in India, on an innovative heat insurance product. So the SEWA product offers a parametric payout when temperatures exceed a defined threshold, and that helps provide relief to women whose livelihoods are impacted by extreme heat. And that work is really at the nexus of climate and health. It's a model that really takes into account women's needs, their priorities, and designs around that. We're also seeing promising results of scaling inclusive insurance through government systems. We worked with WFP on that, and Mathieu will speak later about that. And of course, we've done some work with UNCDF, looking at how social protection networks can serve as cost-effective distribution channels. So what these different cases share is there really are pathways for inclusive insurance to contribute to health, climate, and food security. And on science, the last thing I will say is, the political ambition and the practice aren't enough on their own. Paul already mentioned data, and I want to build on that. We really do need rigorous data to understand what is working, for whom, and at what scale. I started to talk about that with our Impact Pathfinder, but I also want to mention CGAP's work on measurement of inclusive insurance. We've launched a task force to look at that, and the objective of the task force is to develop a globally applicable toolkit of indicators covering access, usage, and quality of inclusive insurance. And we want that to give us the evidence base we need to understand gaps and work to close them. And this task force wants to embed those indicators into established survey instruments so that we don't duplicate efforts that are already existing and that we can create the tools to enable cross-country comparisons. So ultimately, if we can't measure the protection gap with precision, we can't close it. And that's really how CGAP is working across these areas of policy, practice, and science in inclusive insurance.
Wonderful, Anna. It's great. You've linked your contribution there to Paul, Phoebe, and Melissa really strong. We're going to conscious of time, so we're going to keep on moving. Sophia Biarabnawaz. Hi, Sophia. So why is it important to supervisors that private insurance receives explicit attention in development frameworks and financial inclusion agendas as a resilience building and risk management tool?
Hi, Logan. So thank you so much for inviting me. And to answer your question, I believe that private insurers deserve explicit attention in development frameworks and in the financial inclusion agendas, because on one end, resilience alone cannot be built through credit, through saving, through just having the bank accounts. And on the very same time, it is not possible for the governments to act as an insurer and to cover all the risks for the individuals, for the society, for the communities. So I think from like supervisory perspective, it is very essential that we put the private insurers at the central space for the risk mitigation and the risk management, not just for the individuals, for the communities, for basically at every level, from at micro level, at macro level, at meso level. And why it is important? It is important because, to be really honest, insurance really protects the development gains. Professor Paul and Melissa has explained in very detail that what happens when you do not have a risk protection and risk mitigation tool at place. Many households spend years in developing their assets and improving their livelihoods, but there could be a single one adverse event. It could be a health crisis, it could be the death of the breadwinner, it could be flood, it could be like business interruption in any form, and it just like pushes you back into poverty. And then it takes like years and sometimes even generations to get out of that poverty. So I believe that insurance is extremely essential to like really protect the development gains for individuals, for societies, for communities. Secondly, I believe that financial inclusion must go beyond just like financial excess. Because generally, when at least I look at the development, like the developing countries, the most focus has always been on getting credit, on having bank accounts, on savings. And there is no denying that these are like very essential, very important financial services which everyone should have. But insurance is like equally important, because like what's the point if you could go and get credit, or if you have like some good savings in the savings account, but there is like just one financial shock and all of your savings are gone, and you can't really pay back your credit. So insurance is essential to protect these assets which you have built. Insurance is essential to protect the financial assets you already have. So I believe that a financially included person who has access to fund to a bank account, of to savings, to credit, but do not have insurance, or do not have like a financial protection tool at place, they are highly vulnerable to economic shocks. And insurance basically completes that overall in financial inclusion ecosystem. So it is essential, it has to be part of the overall financial inclusion agendas and financial inclusion strategies which countries have. Unfortunately, even for my country, we do have a financial inclusion strategy for banking sector, but we do not have one for the insurance sector. But at the very same time, there is this realization that insurance has to be there in the these national level strategies and these national level policies. And I believe not like too late, it would be there in the overall financial inclusion strategies. Furthermore, why it is important is, as we have been discussing in our webinar, that insurance really build the household and the community resilience. And because now that we have climate change, and there is like this increasing pattern of natural disasters and economic volatility, so the severity and the frequency of the shocks is increasing at like a very quick pace. And it can't be mitigated no matter how much of a savings you have or how much of a assets you have, if you do not have insurance in place. And that is like really essential, that you must have insurance as part of your overall financial health. And similarly, I believe that if you do not have like insurance, then the burden goes to the government, and the government has to act as a insurer of like last resort. But unfortunately, it is not really possible for the governments to act as an insurer in at least developing countries. If I narrate an example from Pakistan, we had two massive floods in 2010, and then again in 2022. So in the 2022 flood, we had like 30 million people impacted by it. And 30 million is like even in standalone it's a lot. But if you look at the comparison of the overall Pakistan's population, it was like almost 15% of the population who was impacted by it. Hectares and like of land was destroyed, the basic infrastructure, schools, roads, buildings, bridges, they were all gone. So the government does not have that much of a capacity to really act as a insurer to support these people, to rebuild this infrastructure, to really act as it's needed. So basically what happened is that the government can't act up, so these people, they are pushed into the poverty, their education is gone, their health is gone, all those facilities, like not even facilities, the basic rights, the basic amenities they had, they lose access to that. So there's a lot of like fiscal pressure on the government. So insurance, and like particularly private insurers, play like really essential role in this risk mitigation and the risk transfer mechanism between individuals, insurers, reinsurers, and businesses, and the overall like the capital markets. So I believe that, to like sum it up, insurance is like extremely essential for development goals, for national development goals, and for the sustainable development goals, and particularly for the poverty reduction, for health, for climate resilience, for gender equality. So it is like important nonetheless. But how are we going to achieve it? I think that's where the supervisor has to play like a more crucial role. That basically our objective is to support market growth, but that is not the only objective. It is also to ensure that insurance is accessible, it is affordable, it is trusted, and that insurance is overall integrated well into the national development agendas and the financial inclusion strategies, and that there is overall an ecosystem where insurance is used for trying new innovation, for providing protection for the underserved and unserved population. So to conclude, I would say that if saving helps build wealth, and if credit helps build or like credit helps seize opportunities, it is actually insurance which helps you protect both. And without effective protection, development remains fragile. Then that is like really essential that private insurers are put at the front and then backed by the government for the overall financial protection. And insurance is not used or conceived or perceived as a peripheral financial service anymore, rather considered as a core pillar of financial protection and financial resilience.
Brilliant. Fantastic, Sophie. It's great to hear that supervisory perspective. Can you share an example from Pakistan of inclusive insurances contributing to development objectives and the role played by CESP in this work, please?
Oh yeah, sure. So there are multiple examples. I would just like go with the one of the important one, which has been like providing protection to like millions of people. So I think like over the passage of time, although insurance is still one of those sectors which is not given like the due attention as it deserves in overall like policy making or like at the national strategies level, but nonetheless there has been development over these years. And one of the most crucial example is the Prime Minister Health Insurance Program, which is also called as Sehat Sahulat Program. It was launched in 2015 to provide inpatient cashless health services for people in low income segment. It was based on a national socio-economic registry where it was identified that who are the people who need like the most help with when it comes to their surgeries or when it comes to like inpatient health services. But over the decade now, we like I feel, to be really honest, very proud to share it that now over 200 million people are covered under this scheme, and every year there are millions of people who are treated under this under the universal health insurance scheme. And right now it is no longer just for the low income segment. It is for like everybody. It is a universal health insurance program which is for like 3 out of 4 provinces and all the territories which are administered by the federal government. So I believe like at least in Pakistan's case, insurance is leveraged in a very effective manner for the SDG 3, which is good health and well-being. And I also feel like since like these development initiatives or these kind of strategies or policies does not like restrict themselves to like one development goal. So when we talk about like having like in being insurance being leveraged for health provision, it is also reducing gender inequality at the very same time, because when we look at the data of this universal health insurance program, we see that women are the major beneficiaries. More women are getting treated under it as compared to men, so it is in a way also reducing gender inequality. And furthermore, there are like 2 more examples which I want to narrate if we have time. So in Pakistan's case, we also have like over 17 million people insured under inclusive and micro insurance. And since Pakistan unfortunately is a developing country and we have like over 40% of population living below the poverty line, we have micro insurance or small ticket insurance which is providing protection to 17 million people. And this is like an extension contributing towards SDG 1, which is no poverty, and also like SDG 10, which is like reducing inequalities. But SSCP do realize that there is a lot more which needs to be done. So in that like with that thought, with that understanding, we have constituted this inclusive insurance synergy group, which has representation from the insurers, from the microfinance institutions, from mobile network operators, from like even micro insurance center at Milliman. And the basic objective is that we can foster collaboration, we can introduce innovation, just like Melissa was explaining that our insurance sector does like have products, but these products are not really created for the end user. So how can we create such micro insurance or inclusive insurance products which are like well customized to the needs of this low income segment? So that is like something where a lot of our focus is on right now. And the last example I want to narrate is like how in Pakistan's case, insurance or social protection, like social insurance, is used for the well-being of the workers. So we have like this law from 1968, which requires that all the commercial entities and all the industrial entities or employers basically need to get insurance for their employees for against like death, disability, or sickness. And today we have like more than 9.5 million workers which are insured under this group life insurance scheme, and it is contributing directly to the SDG 8, which is decent work and economic growth. But unfortunately, again, there is a lot of room. Like there's a big protection gap for contractual workers, for the part timers, for the employees in the informal sector. So for that, SSEP has done like a very extensive research. A report was published on it, and then we have also proposed amendments in the primary law that how can the contractual and the part-time workers could be included in it, and how the sum covered could be bridged with the like connected directly with the low the minimum wage, so that it gets automatically upgraded every year with increase in inflation. And we are also like taking it up with relevant stakeholders that how a digitalized enforcement mechanism can be created so that this law could actually be implemented and more than 9.5 million people are insured. So I believe that that there is a lot of room for improvement. A lot needs to be done, but there are like still some things which have already been achieved. So this is like few examples from Pakistan's perspective.
Yeah, they're very powerful examples. Thank you, Sophia. Big numbers as well, which is super important. Great. We're going to keep moving on. So we heard from Melissa a few minutes ago. Spoke about things from a private sector practitioner perspective. Machi, we're going to jump over to you. You're going to speak from a public sector participant perspective. So can you explain the importance of pre-arranged disaster risk financing to your crucial work and the role of insurance in this toolkit, please?
Thanks, Rokan, and good afternoon, everyone. So I work for the World Food Program, which is the largest humanitarian organization, and well, we don't only do food distribution, although this is by far the most important thing that we do at the moment. I just wanted to start by explaining a little bit like our three strategic objectives, three strategic outcomes. So the first one is about, well, dealing with the large crisis, food crisis. The second one is about reducing future humanitarian needs by building resilience. And the third one is about strengthening systems and partnerships. The great thing is that WFP started working on insurance since 2004, and initially really building on the food crisis in Ethiopia. And we purchased the first policy in 2008 for WFP to be able to protect our own operations. It didn't trigger. But from there was born the R4 experience that was really like, the foundation of our work on insurance. I will come back to that a little bit after, but I wanted to focus a little bit on the targeting because it's important. We use insurance for different target populations. We use insurance for the most vulnerable and food insecure people when we're responding to food crisis. So sometimes even when we're in crisis and famine modes, but we also use it for the households that recurrently require humanitarian assistance and the population who are exposed to chronic and repeated shocks, and in particular climate, economic, and conflict related. And that's for the resilience building. So the purpose of the targeting for resilience building and for our inclusive insurance work, and that's why I'm insisting a little bit on that, is to reduce the dependence on assistance over time and to build resilience, livelihood, and self-reliance. So we work on pre-arranged financing through two main instruments. The first one is anticipatory action through forecast-based financing instruments. This is really about the emergency response with our macro insurance work, and through our financial inclusion and in particular inclusive insurance kind of work. When we started the micro meso program, insurance was embedded into a 4-pillar resilience building, integrated resilience building strategy that was called R4, which had risk reduction when the participants were engaging in these activities that could be climate adaptation. I will get back to that a little bit after. Then WFP would pay the premium on their behalf. And we recognize the insurance premium as a transfer modality as much as we recognize it for food distribution or cash or vouchers. This is actually a voucher. And so when there is a payout, the insurance company will distribute the payout to the beneficiaries. And this is an extension of our food assistance to our beneficiaries through the private sector. And I think this is quite important. Then how we work through the different strategic objectives of strategic outcomes of WFP. Under the first one, we're really protecting WFP's operations so that we can respond as early as possible and we can blend in public resources with private resources for emergency response. For the second resilience building, we de-risk value chains working with groups, aggregators, farmer organizations, and sometimes WFP is also the policyholder, but we have pre-targeted beneficiaries who know that they're protected. And we're also working by providing safety nets to the most vulnerable farmers and communities. They don't have to be actually farmers to participate to our programs. And after, we're working with governments to strengthen their existing systems and policies, like what we've done in Ethiopia or or Zambia. What's really important is that WFP does not only strengthen local markets, strengthen government systems, and so on, but also place the risk on the markets. And this is probably one of the major specificities of WFP compared to other UN agencies, is that we had about 340 million US dollars that were placed on the market last year, either directly by WFP or through the work that we're doing. Sometimes it's a little bit difficult to account it, but that represented 40 countries and about 5 million beneficiaries.
Great numbers, Matthew. Can you share more from the World Food Programme's work of how insurance contributes to SDG 2, Zero Hunger, SDG 13, Climate Action, and SDG 17 partnerships?
Sure. Well, so specifically on inclusive insurance, it really contributes to these three SDGs in particular. And of course, WFP has one core objective is SDG 2, ending hunger.
Yeah.
We're not exactly on the right track at the moment, but this is really by far the most important for us. And so for us, it's really inclusive insurance is contributing to the SDGs when it's really integrated with other instruments, other financial instruments, saving, credit, financial literacy and education, of course, but also risk reduction, climate adaptation, resilience building, and national systems, and including social protection, adaptive social protection. We actually recently released a publication with the World Bank on connecting disaster risk financing and adaptive social protection systems. What we want for SDG 2, Zero Hunger, is that we want insurance to protect food security after the climate shocks, to help, and that has been said by my colleagues very well, so to help them know that they're protected, so they can actually start investing a little bit better, because part of their risk exposure is transferred to the market, being local or being through WFP. And that allows us to strengthen food security, food consumption, and avoid negative coping strategies such as selling assets, reducing meal, putting children out of school, and by extension, increasing poverty and vulnerability. And what we see is that the fastest we respond and the fastest these instruments trigger, the shorter the food crisis will be, whatever the levels. So we conducted a study with a company called Tetra Tech across several countries: Ethiopia, Kenya, Zimbabwe, Senegal, and Malawi. And we really found that insured household had a much stronger resilience and food security than the one that were not insured. So for instance, in Zimbabwe, after a shock, the household who received an insurance payout had 28% increase in their food consumption pattern, and a 46% reduction in negative coping strategies. In Senegal, in 2014, the food consumption score, which is really one of our key indicators about food security, was almost maintained. It only reduced by 8% for the household who were insured and had the whole package, and was reduced by 44% for those who were not insured and did not have access to that. So really, insurance is really strong, and it enables long-term investment in livelihoods and in productivity. And this is really important, is the confidence it gives to the farmers. I would like to maybe stay on Senegal. One thing, we asked the insurance company that we've been working with since 2013 to tell us was the situation of the farmers that we started helping 10 years ago. And they're still buying the insurance product. They keep investing. So they've adapted to their financial capacities, but they're still doing it. We also have like evidence from Bangladesh where we're seeing that the farmers are increasing their investment because they know that they're actually insured and because they know that their family is protected. And when they're receiving a payout, close to 80% of them use the payouts for productive activities such as purchasing inputs, buying livestock or poultry, and also doing tree planting, because this is actually very important on that topic. And I will get that to climate action very, very short. And that's why we see the integration with other financial inclusion instruments, but also with other risk reduction and climate adaptation measures. So under SDG 13 climate action, insurance is really like a core instrument for climate adaptation. And I would say even like by extension for loss and damage when climate adaptation is failing. And it helps households, farmer, pastoralists, communities to absorb some of the shocks more quickly. And it also gives an incentive to be better prepared and to adopt some of the practices. So I was talking about the R4 model before, and for instance, in Zambia and in a few other countries, what we've done is that we partnered with the Ministry of Agriculture and with FAO to promote adoption of conservation agriculture. And through this adoption, then WFP was introducing the insurance model. We've also supported the adoption of landscape restoration measures in Ethiopia, for instance, in Senegal, and in a few others, or in Malawi, tree nurseries. Not only that, but I thought I visited one and I was actually pretty impressed myself. So in some evidence in Bangladesh is that in 2023, the assessment that we conducted found that 60% of the participants felt more confident to better manage their weather-related risks. In Zimbabwe, more than 90% of the surveyed household reported that they had improved yield and reduced post-harvest losses thanks to risk reduction techniques that they had learned through the program. And finally, we're also trying to innovate a little bit in this space all the time. And so the team is working on a new instrument that is called Forecast Index Insurance in Guatemala, Ethiopia, and Uganda. And basically, it's really trying to combine the anticipator action forecast models and trigger models with insurance or risk transfer models so that we can better protect and act faster in case of a drought. In Cuba, we're trying to combine, and we had an event with CGAP a few months ago, how we can reduce the premium rate when the participants are actually adopting disaster risk reduction measures. And we think that this is actually like a really essential tool approach in the long term for sustainability.
Fantastic, Matthew. Again, you've shared loads of numbers, evidence, super important. We're going to move on. Again, we're blasted through our time. But Uda, thank you very much for your patience. Can I begin by asking where a large insurer such as Prudential is motivated to innovate in the inclusive insurance space, and how can you serve households and micro and small enterprises in a way that balances development goals and your commercial objectives?
Sure, and thank you, Lorcan. And it's quite late, and so I'll keep my intervention short because we've had, especially Melissa has laid out very eloquently, the why. Why is this important? And for a large insurer, and I'll say that Prudential PLC is a life and health insurer, and we operate across Africa and Asia. So obviously the protection gap is huge. We realize that. But over time, and I think, again, Melissa, you pointed to these, right? Which is, how do you access these populations? How do you create products that are affordable? The whole issue around inclusivity is important for us, but we're quite new at it. So I'm going to just preface that to say that we're still new at this, and we're trying to figure out the how, and even defining what inclusive insurance means for a commercial insurer like us. I mean, our heritage was the £1 policies, but we've moved really far beyond that. And obviously, we're focusing right now on segments that are easy to reach, that kind of understand and already have some kind of financial literacy and where we can have profitability. So this is coming from the commercial insurer perspective. And when you try to then say, okay, we understand why this is important, right? There's the protection gap. There's also the long-term view. There's issues around diversification. These are huge segments of society that we cannot ignore. But I think the key issue, and I'm going to shift because we have limited time, to really the challenges of how you go there. So we have a great board, a great leadership that says, okay, this is important, but how do we do this? And I think I'm going to focus more on my intervention because people have already spoken about this, but the more of the nitty-gritty on the operational side of why is this challenging for us? So if you talk about, we've spoken about distribution channels, right? The access, the awareness, the products that need to be a lot more aligned to what people need, the relevance, getting to those points and saying, okay, right, say in India, we'll go there and say, let's start to think about a segment that's outside of what we're currently targeting to be more inclusive. This requires a whole bunch of time and alignment around, okay, let's do a customer needs assessment. Let's find what products would work. Who are the distribution partners? Because we don't have those distribution partners. We're mainly a bank assurance and agency run model. So outside of that, how do we find the partners that we can work with to reach? And we already have the trust of these populations because we also need the scale for the economics to work. I think the key there is for our business units, they've got short-term targets. And when we talk about inclusive insurance, it's a long-term game. So how do you balance those two out and say, and there's an opportunity cost here, rather than actually go through all of that work through the product teams, the business development teams, the marketing teams, to try and be more inclusive, to enter markets where we want to have more resilience for society and contribute to the SDGs. I think the key issue is, can we support our business units in ways that help them meet their short-term targets, but in ways that then also gives them the capabilities on the ground? Because it's an opportunity cost. Which one do you go for? You go for the targets that are more immediate and are easier. What we're proposing, and my title is Director of Social Sustainability, really actually is about Director of Inclusive Insurance. I come in and I'm a bit of a nuisance because it's, I'm trying to get people to think about more long-term game, and then how do you go about that, and all of the steps and the building blocks it takes to then get to that transactions of being able to be more inclusive. I think that is the key that we're trying to solve right now.
Fantastic. And just getting practical. So what are you've spoken about some of these challenges, but what types of concrete public sector support are required to transform your ambitions into innovations and meaningful impact, Uta?
I think I'll focus more on the climate risk area. And again, Anar already mentioned some of these things in terms of health. One of the things that we are looking at and exploring is the impact of climate change on health. And this, of course, is a very nascent risk. And just to give background, I did used to work at the International Finance Corporation on climate risks and smallholder farmers. So Mathieu, what you're saying is very relevant for us. And in these types of markets, what Paul was saying around data, we're finding that the data is not there. So we understand the catastrophe models, we understand what's happening in terms of heat, but how is that impacting people's health, their mortality, in order for us to then be able to come out with relevant products? So one of the things that we do is, of course, go out and do customer needs assessment to say, what do people who are exposed to a lot of these impacts like heat and pollution, what do they actually need? But then based on that, then can we design products and services around that meet those? The biggest issue for an insurer like us is then who's going to help us with that initial risk? Because we're supposed to also provide that risk prevention, but we also take on the risk, but we also have risks that we also need to cover. So one of the things that we're looking at in terms of a concrete public-private partnership is, can we work with development finance institutions and governments in ways that can help us to really create the demand? So that's on the parts of the populations who are exposed to that, to us, the scale comes from the governments, and in many cases, like places like India, they're talking about subsidizing premium to actually get that market going. But then for us as an insurer, we are not confident in pricing these risks. So can there be a first loss layer that allows us to kind of test these? And the IFC was doing something very similar in Africa a couple of years ago around smallholder farmers and crop insurance. Can we do that around climate and health? So I think this to me is a concrete example of blended finance. We talk a lot about that. We talk about public-private partnerships. And this is one area where we realize that we need all of these different stakeholders, including the development finance institutions, the NGOs, the governments, people who are working on the risk prevention side of things. And then we can step in as a private insurer to kind of test these types of products and services in ways I think that then eventually leads to market formation and scale.
Brilliant. Thanks, Sue. I think, again, you called for SDG 17 partnerships for the goals, about public and private sector organizations pooling their complementary resources to generate transformational innovations. I think that's a great way to finish. I'm really conscious of time, everybody. I think a lot of questions have been answered in the chat. So I'm going to just really quickly, in 1 minute each, please, I'm just going to ask Paul and Phoebe to share just their reflections on what they've heard today. So Paul, can we begin with you, please?
Yeah, no, I'm very taken with Phoebe's global commons, and I think she's talking about all digital assets, including data. And I do think this is when the central banks are looking at economic assets and they're trying to mitigate, floods and stuff. The first point of discussion between the public and private is setting up these data observatories, where you actually integrate the data across the public and private sector. And a lot of that data has to be funded by government, to be honest. And I think once that's there, it's Phoebe's global commons in open source. We can actually have quite a lot of innovation and partnership and implementation and inclusive insurance.
Brilliant. Thanks, Paul. Phoebe, just 1 minute, please.
Yes. So a few messages. It was incredibly fruitful and deep and knowledgeable discussion, and I love the conversations on the chat. First message is insurance is not merely a financial product, like we said, it is a critical enabler of stability, resilience, and sustainable development. Second message, insurance transforms uncertainty into manageable risk and enables long-term development planning. Of course, the current challenge, as it has been extensively presented, is the global insurance protection gap. Large portions of climate, environmental, health risks remain uninsured, and the gap is greater in the vulnerable. So what we need to do is to move from risk transfer to risk reduction. Insurance creates incentives for adaptation. And in this movement, we need to build public-private partnerships. Insurance companies need to increasingly collaborate with governments, development banks, climate scientists, local communities, other scientists, and use models, satellite data, early warning system, resilient planning tools. And finally, the insurance sector once again manages trillions, and in this trillions management, it can support, its capital can support many SDGs, almost all the SDGs: renewable energy, climate resilient agriculture, sustainable cities, health, education, digital inclusion. So let's try to put justice partnerships in the post-2030 agenda in order to have insurance become a cornerstone of resilience, inclusive and sustainable economies, and move from protection to prevention, from recovery to resilience, and from risk management to sustainable transformation. Thank you for the opportunity to speak here.
Excellent, Phoebe. That's fantastic. And so just let me quickly finish today's webinar by restating our objectives, outlining our next steps, and thank everyone. So our primary objectives today were to elevate recognition of the insurance industry's distinctive resilience building and risk management capabilities in achieving the SDGs, and to help establish inclusive insurance as an explicit lever for change in the 2030 agenda and the post-2030 agenda, as Phoebe just mentioned. I believe we've made a strong contribution to these objectives. Our speakers have shared a compelling story about inclusive insurance helps households and micro and small enterprises build resilience, navigates risks, and powers development in our increasingly complex and risky world. This webinar will be published on the CGAP YouTube page soon, and we will also share a summary of the discussion with you via email in the coming weeks. We'll take a note of all the questions in the chat as well. And we want to thank our speakers, Paul, Phoebe, Melissa, Anar, Sophia, Matthew, Uda. I also want to thank my CGAP colleagues, Sarah Parker, Prem Vashan Ganesh, Danny Oliveira, and Lamis Daoud, and you, our audience, for joining us over the past 96 minutes now. You might take a minute just to answer a simple 3-part survey that will appear on screen when you exit the webinar. Thanks again, and have a great day, everyone. Bye.
Bye.
Thanks, Lorcan. Thank you very much.
Thank you very much. Bye-bye.
Bye-bye.